Today in crypto society is headed towards a new form of digital ownership with an economy and greater metaverse based on the blockchain. The concept of the metaverse is typically depicted as actual and augmented reality based in a virtual world. Most recognize this concept since it is present in several fictional movies of dystopian futures like Ready Player One, Minority Report, and Avatar. However, the concept has since quickly gained attraction from the technology industry, making it more viable than ever before. The metaverse is seen by many as the natural evolution to what comes next after what people are already doing on social media. Industry experts believe that people are already seeking new places to interact with each other, collect virtual likes and gain recognition. Still, other individuals see the metaverse as an opportunity to live life in a more childlike way, in a setting free from the confines of today's societal structure. More insights from Evolution Land. Here learn more about Evolution Land. Continue reading on Cointelegraph. For the past few years, the Facebook CEO has shown futuristic plans. As the social network loses popularity and public trust, he has shown interest in new topics, ones that have not been used in testimonies against him in Congress. Related reading. U.S. Congress wants to grill Zuckerberg again before January 2020. Mark Zuckerberg wants to outgrow Facebook. Yes, he wants to be bigger than social media, which already is huge in the lives of almost every person. He wants to be bigger than Facebook, a network that has allegedly been used to influence people's decisions by analyzing their personal data. He wants to go bigger, and that does not mean better. Alongside our glasses, Zuckerberg's main focus is now on building the metaverse. This idea points to a truly virtual world, where people can actually enter a virtual space. Zuckerberg has invested millions of dollars in the possibilities of building the metaverse. He also announced his plan to hire around 10,000 people around Europe. Now that he seems to be considering changing Facebook's name, this event points out to the company finally shifting to serve his ultimate project. Last summer, he told The Verge that the metaverse is, of course, the word metaverse is not Zuckerberg's invention. Its origin dates back to 1992 when the sci-fi writer Neil Stephenson coined it for his novel Snow Crash. In the midst of Zuckerberg's announcement, a Twitter user reminded that the word metaverse was used to portray a virtual world owned by corporations wherein users were treated as citizens in a dystopian corporate dictatorship. To this, Twitter's CEO Jack Dorsey replied, narrator he was. To talk about Zuckerberg's interests versus Dorsey's means to talk about centralization versus decentralization, the omniscient evil core who wants to rule it all versus the ones who hope for free global trade through Bitcoin, taking nothing from its users. As a big Bitcoin enthusiast, Jack Dorsey believes in a decentralized system, a global currency, and international free trade of goods and services. He thinks BTC will open the doors to a future where the possibilities for world peace are higher. Dorsey's work for building a decentralized exchange for Bitcoin aims to be completely open, as he had tweeted back in July, open roadmap, open development, and open source. As he plans to use the Bitcoin blockchain to bring more opportunities to the world, he opposes entirely Zuckerberg's idea of dominating a new reality and influencing his users for self-benefit. Zuckerberg looks at the power of cryptocurrency as a means to gain more control, and Dorsey looks at Bitcoin as the future native currency of the internet and the basis for a non-custodial wallet accessible to all. While testimonies from previous Facebook employees are heavily criticizing the company, these metaverse announcements have a tendency to come to the light whenever the parliamentary committee is due to hearing them. The Washington Post made a strong point back in September by saying that Facebook's intentions are clearly political and due to its reputation declining. A general worry resonates with their quote of Joan Donovan, research director of the Shorenstein Center on Media, Politics and Public Policy at Harvard University. Mark Zuckerberg's records do not show him as a person who plays for democracy, but for himself. Strategies on top of strategies have not quite covered his company's toxicity. If he were to be the one to rule our future reality, what hopes would be left for a decentralized world? Facebook's mass manipulation does not paint a sunny landscape for a virtual reality where, beyond reading our data and selling it, they could hear us, see us in real time, know how we act, and influence the masses even further. The metaverse itself is not an idea, but the fact that it would most likely be centralized and dominated by a big corporation leaves many trembling. It is no longer about Facebook dominating the virtual reality market. One big guy ruling over our surroundings makes the world a place where ideas, politics, and the economy are entirely delivered to the hands of the top 1%. Related reading: China can't regulate virtual worlds, the pros of decentralized metaverses on his own proposition that questions whether his idea of virtual reality can bring us closer than screens. Would it not be isolating us even further by masking the need for human contact with fancy gadgets? Welcome to a dystopic world where the evil core did not just play democracy, but bear human needs. Meanwhile, Bitcoin enthusiasts play for the actual bigger leagues, focusing on major problems of the world's economy, protecting the user's needs and privacy, thus showing true democratic behavior, aiming for international free trade as the connection that people could actually benefit from. Highly volatile cryptocurrencies like Bitcoin, Ethereum, and other altcoins can behave irrationally at any given moment, especially when turbulence strikes. But what happened this morning on the US branch of Binance was shocking for even those who have seen flash crashes happen in real time. The result of a massive wick left on the biggest chart was a violent trip to $8,000 where coins were potentially exchanged for prices that are currently 87% lower than where Bitcoin is trading at right now. Here is a closer look at what went down, and what might have happened as a result. If you've been in crypto for some time, chances are you've heard some horror stories. Other users have lost funds due to hacks, sent funds to the wrong address, or worse. What few ever experience, however, is getting caught up in a flash crash. Related reading: Bitcoin price sets new all-time high above $65,000. We don't mean a particular strong sell-off, but a flash crash that sends the price of an asset diving so deep, it can often bring them back to close to zero. While this morning Bitcoin price didn't fall back to nothing, it did get a digit knocked off its price tag, and about 87% of the value per coin, according to the Binance US biggest price chart. The flash crash took the cost per BTC back to pre-bull market breakout levels from back in August 2020. It also was roughly an 87% fall from current prices, which was a larger drawdown percentage-wise than the bear market from $20,000 to $3,200 at the low. The hourly chart below is a better demonstration of how ridiculous the wick looked on lower time frames as it was happening. The wick reached as low as around $8,200. Any lucky Binance US users with a limit order ready to go could have gotten filled during the madness, which also means that some poor pleb could have sold their coins at a cost of $8,200. Significantly lower than the current price per Bitcoin, which just yesterday reached a new all-time high. Related reading: Bitcoin price prepares to blast off back into RSI bull zone. In the past, assets like Chainlink and even Ethereum have flash crashed down to nearly zero. Keeping orders ready on an exchange can take advantage of situations like the above. But these rare events aren't predictable and can strike at any moment. So which legend bought $BTC at $8,000 today? Simon Dedick, at Sgoinaldo, October 21, 2021. Follow at Tony Spilitrubk on Twitter or join the Tony Tradesk Telegram for exclusive daily market insights and technical analysis education. Please note, content is educational and should not be considered investment advice. Despite the fact that Bitcoin has made a new ATH above $66,000, the exchange reserves have continued their trend of decline. As pointed out by a CryptoQuant post, the Bitcoin All Exchanges Reserve continues to show a downtrend despite the crypto making new all-time highs, ATHs. The All Exchanges Reserve is a BTC indicator that tells us the total amount of coins deposited on centralized exchange wallets. When the value of the metric shows an increase, it means investors are sending more of their Bitcoin to exchanges. This could imply that there is a selling pressure in the market as holders usually move their crypto to exchanges for withdrawing to fiat, or for purchasing altcoins with them. Decreases in the indicator, on the other hand, suggest the supply for BTC is shortening as investors are taking their coins off exchanges. Such a trend could mean there is a buying pressure in the market and may prove to be bullish for the price. Here is a chart that shows the trend in the Bitcoin All Exchanges Reserve indicator over the past couple of weeks. As you can see in the above graph, While the price of BTC has shot up recently as the crypto makes new ATHs, the indicator's value has sharply fallen down. Related reading: as Bitcoin reaches new ATH, another promising Cardano project Raven Dex unveils their DEX front demo, kicks off seed sale to early investors. What this implies is that many investors still haven't tried to realize their profits. They have rather withdrawn their BTC and took it to personal wallets for hodling. Below is another chart, this time for the long-term holder super indicator, which shows the degree of realized profits by investors who have owned their coins for more than 155 days. As you would expect based on their reserves, the long-term holder super has low values right now, showing that long-term investors still haven't moved to realize their profits. Related reading: Bitcoin futures ETF exceeds expectations, trades $1 billion on day one. Even though BTC has already made new ATHs, it would seem holders are still expecting the price to appreciate further before they begin to harvest their gains. At the time of writing, Bitcoin's price floats around $65.7K, up 14% in the last 7 days. Over the past month, the crypto has gained 51% in value. Here is a chart showing the trend in the price of BTC over the last 5 days. Bloomberg: just days after launch, the first U.S. Bitcoin futures exchange traded fund risks becoming too popular for its own good. The ProShares Bitcoin Strategy ETF, ticker BITO, is already on track to breach a limit on the number of futures contracts it is permitted to hold by the Chicago Mercantile Exchange, according to data compiled by Bloomberg. After 2 days trading, BITO owns nearly 1,900 contracts for October, and CME rules cap the number of front-month contracts one entity can own to 2,000. To avoid hitting the limit, the ETF has also amassed 1,400 November contracts. But at the rate it's adding assets, the fund already has more than $1 billion under management. The maximum total position of 5,000 contracts could be in view soon. An immediate solution is for BITO to spread out its holdings into longer-dated contracts. However, that risks further distancing the fund from the performance of Bitcoin. Its ability to efficiently track the largest cryptocurrency is questionable anyway because it has to pay to roll over contracts, and the futures curve currently slopes upward. The end result is the ETF will start taking on potentially significant tracking error versus the spot price of Bitcoin, said Nate Geraci, president of advisory firm the ETF Store. The ETF is forced to obtain Bitcoin price exposure at higher and higher prices as it goes further out on the futures curve. A spokesperson at ProShares didn't immediately respond to a request for comment. The potential good news is that the CME is raising the ceiling to 4,000 front-month contracts, starting with November futures, although there will be a limit of 2,000 contracts for each subsequent month. While the current pace of inflows could see BITO hitting those curbs too, the launch of competing products may alleviate the pressure. Funds from Valkyrie and VanEck are both due to begin trading in the next few days. However, the momentum behind the ProShares ETF will be hard to stop at this point, according to Bloomberg Intelligence. The unprecedented early volume in BITO makes it like a snowball rolling downhill, as liquidity and assets begets more liquidity and assets, said Eric Balkunas, senior ETF analyst at Buy. The new ones will have some selling points such as only holding the front month or being cheaper, and that will help, but it is nearly impossible to steal volume in the short or medium term. BITO and its peers will also have to contend with the ripple effects on the Bitcoin futures market. JP Morgan Chase & Company (NYSE), JPM strategists warned Thursday that high demand for the funds risks distorting the derivatives space, steepening the future curve even further and driving up roll costs, at the expense of ETF investors. The experience with BITO may pressure the Securities and Exchange Commission to speed up approval of funds that hold Bitcoin directly, Balkunas said. That certainly would do the trick in slowing down BITO and providing a release valve for futures demand, he said. Copyright 2021 Bloomberg LP. Hit the like button and subscribe to the channel.